Hey, how y'all doing out there? It's Cranston, Atlanta's right-hand man for real estate. And today I wanted to talk to you about credit and how it affects you buying a house and how you can better your credit and actually even the breakdown of credit, the percentage of what things affect your credit, and also how many points do you get for certain things. So it's going to be a hard-hitting video. Listen to the whole thing, watch the whole thing, and I guarantee that you'll be happy. I do apologize. I wish I had a whiteboard and everything, but I don't. I'm gonna be down looking at my notes a little bit because there's some numbers on here that I just couldn't remember. Just way too many numbers when I go down to the points that you get for certain things. So again, I hope you like this video. Let's go ahead and get right into it. So when you're looking for a house, the things that a bank or a lender was going to look for is going to be your actual income, your debt, your savings, and then your credit score. All right, the number one thing that they're going to look for is actually going to be your credit score, though, and that's going to represent. They're going to show your credit worthiness. It basically says whether if I give this person this loan, what's the likelihood of them paying it back to me? And then you may feel like, you know what, well, I make enough money and everything and I can squeak by and now I can afford this loan. I just may be living on ramen noodles for the next 30 years, but I can afford the loan. But the bank is looking at it like, no, because as soon as one thing goes wrong, we're going to have to take that house back, and they ain't really into, having houses on a book all the way. What they want to do is sell these things, all right? So basically, let's go ahead and get into this. First, I'm going to go and get some things that can help you fix your credit and increase your credit score. And some of this stuff you may know, some of you don't, right? So the first thing I'm thinking about is disputing any type of errors that's on your credit report, whether it be your name is wrong, whether it be the amount that you owe on a credit card, whether it be a credit card or some type of loan that's not even yours. So you want to make sure that you take a look at your credit report and make sure that you look at stuff, or even stuff that's been on there for 8-9 years that should be removed already because of the statute of limitations, right? So it's not supposed to be on there after 7 years. So you want to think about those type of things. The next thing is going to be paying down your credit cards. You don't want to have these high balances on your credit cards. And also, you're only supposed to be using 33% of your credit, right? So not saying, all right, 33% on this credit card, 33% on this credit card, and 33% on this one. What they're saying is if you take all three, 33% of all your credit. So that's all you want to be using, right? So then after that, you want to get your collections taken care of. Get them removed off your account. Whether those things, sometimes they're easy to get removed because it could be the fact that maybe, again, they don't have a social security number. They don't know what the balance was when they started out. Maybe they don't have your social security number. Whatever it is, this stuff may be wrong and you can get it removed really easy because that stuff affects you. And again, it may not even be yours or something like that. So you want to have anything that's being reported on your credit bureau. You want to make sure all of that stuff is being reported correctly. Anything wrong, have it removed. Then you want to when you get in credit, you want to make big down payments. When you make big down payments, that basically says, all right, I'm not taking out this loan for $30,000. I'm only taking it out for $20,000, whatever it is. I'm just saying, when you make big payments, that brings down that with the amount that you're borrowing, it brings that down. Then no late payments for 12 months. So you definitely don't want to have any late payments. That brings the credit score down. But if you don't have them, it'll bring your credit score up. So also debt to income ratio. And basically what that is, it says, all right, well, how much money do I have coming in opposed to how much money do I have going out? All right, so you just want to make sure that you have enough money coming in to take care of any bills and it's not just scraping by, anything like that. So now I want to get into the actual percentage of things that affect your credit report. This is some hard-hitting information, so you may want to write it down. You may want to just rewind and watch me a couple of times and tell you, it's my pleasure. I love doing this. I'm having a great time. So let me start off at 35%. 35% of your credit is going to be late payments. It's going to be things like judgments, bankruptcy, and collections. 35%. All right. So 30% are going to be current credit loans or load or whatever you want to look, however you want to look at it. And that's basically going right back to debt to income ratio. So that's what you want. That's 30% of it is how much are you spending on these loans that you have already out. 15% is going to be how long have you had these accounts open. The longer you had it open, the better for you. The least amount of time, obviously, is just reverse, right? So 10% is going to be the different types of credit. Banks want to see if you can handle different types of loan, whether it be a car, maybe it be credit cards, maybe you're paying on furniture or something like that. So different types of credit is going to be 10%. And the last 10% is going to be new credit. Any type of new credit that you're applying for, you're going to get 10% for that. The longer you have things open, the better it is for you. And I'm going to go ahead and break that down for you right now. I'm going to give you the actual points that you're going to get for different credit, so like credit cards and stuff like that, or the stuff that we talked about. How long have you had something open? You're going to actually get the points. I'll break this down for you. So, and again, like I said, I'm gonna be looking at this piece of paper because I couldn't remember all of this. It's a lot. So, the first thing that we want to talk about is the number of credit cards. Pay attention to this. 0 credit cards, you get 15 points. 1 credit card, 22 points. 2 credit cards, 30 points. 3 credit cards, 40 points. 4 credit cards, 30 points, and 5+ credit cards, 20 points. As you can see, once you get over 3, it starts to go the opposite way. You don't get that many points. So the optimum number is going to be 3 credit cards because you get 40 points for having 3 credit cards, right? So the next thing, the number of months you had your credit on file, different types of credit, no matter what it is, how many months have you had it on file, right? So anything less than 12 months, 12 points. All right, 12 to 23 months, 35 points. 24 to 47 months, 60 points. And then 48 plus, you're gonna get 75 points. So obviously, like I said, the longer you have things open, the more points you're gonna get it for it. The more points you're gonna get for it, the better it affects your credit, right? So the next thing, the number of months since your recent bank cards or credit cards. So how long have you had these credit cards, and then how many points you're going to get for it depending on the month. So 0 to 5 months, you're going to get 20 points. 6 to 11 months, 25 points. 12 to 17 months, 30 points. 18 to 23 months, 38 points. 24 to 35 months, 45 points. And then the last one is 36 months plus. Anything of 36 months plus, 49 points. All right, so this is going to be some really great information. One more thing for you, one more category for you that you want to make, that you would like to know about. I'm pretty short. Is definitely crucial. So the number of months since the most recent derogatory information that's been on your account. All right, so let's see, and this is going to be things like collections, judgments, bankruptcies, foreclosures, things like that. So 0 to 5 months, 10 points. 6 to 11 months, 15 points. 12 to 23 months, 25 points. 24 to 47 months, 38 points. 48 months, you get 50 points. And if you don't have anything that's derogatory reporting on your credit, 75 points. So I wanted to go ahead and break that down for you. Hopefully you felt like that was some good information. I really thought it was some crucial information that I wanted to get out to you guys. I appreciate you listening to me, and I hope you like it. If you do like it, please hit that like button. That's the whole #1 goal, is to at least help one person out there. So please hit the like button. Also, if you have any questions or comments or something like that, either email me or put it in the comment section. I promise to get back in touch with everybody. And then also, I am a agent here in Atlanta, so if you need an agent, it would be my pleasure to help you find your next home. Again, my name is Cranston Kelly, Atlanta's right-hand man for real estate.